Tobias Lütke and Scott Lake had no clue when they chose to open an online business in 2004 that they would wind up developing the world's largest e-commerce platform. They only intended to create a website where they could sell snowboarding equipment. Today, Shopify hosts over 1 million shops for individual sellers, as well as internet behemoths like Google and Tesla. Every month, the company brings in more than $20 million in sales. You may only know Shopify as a tool that scammy YouTubers use to promote their drop shipping course on their unsuspecting viewers. But Shopify the company is a lot more than that. As consumers have shifted their shopping trends from in-store buying to online, Shopify has helped in being the backbone of that movement and has given small businesses an interface that is simple and easy to use to keep up with the online shopping craze.
COVID-19 may end up to be the unexpected tipping point that shifts the majority of retail sales online from in-store.
Shopify was rewarded for not only selling their product to clients, but also for assisting them in becoming more successful on the platform. The more money customers made, the more money Shopify made. This prompted Shopify to focus on assisting their users in becoming better merchants, which is the primary cause for their current success. In this video, I will tell you how Shopify became a $185 billion business and where they might go from here. Shopify, like many other firms, began as a solution to a problem that the founders had personally encountered. Lütke and Lake planned to open an online snowboard business, but they couldn't locate the right software. They decided to create the solution they desired, which became Shopify. They didn't stop there, though. Shopify grew from a tool to a platform to an offline ecosystem to become a billion-dollar company. In the company's infancy, they focused on 3 main ideas that would help establish Shopify as the perfect tool for small businesses looking to break into the world of e-commerce. Shopify's initial product was designed to be simpler, faster, and more visually appealing than the e-commerce platforms at the time. Shopify went beyond merely serving sellers to assisting developers and the broader e-commerce industry with their products. Shopify intends to keep providing more straightforward sales solutions in an increasingly complex e-commerce environment. Tobias Lütke was a software engineer by trade, but he was burned out by 2004 and no longer wanted to work as a programmer. He decided to follow his passion and launch Snowdevil, an online business where he would sell snowboards from third parties. He was immediately confronted with a major issue. Lütke was frustrated by every tool he tried to employ to build Snowdevil. He truly needed a basic user-friendly tool, which he couldn't find. Lütke decided to build the online store framework for Snowdevil from the ground up, rather than adopting an off-the-shelf option like Yahoo Stores. He did this by using Rails, a new programming framework designed by 37 Signals' David Heinemeier Hansson. This was extremely significant for Shopify's growth. Lütke and his early team created a simple-to-use solution where none previously existed, giving small business owners the tools they needed to address their own challenges. This opened up a whole new market of individuals who had never been able to sell online before, but now had everything they needed. Because of Lütke and Weinen's developer experience and commitment to serving a larger audience, they were able to make the essential move from tool to platform by creating an API and an app store. They simply saw this as a way for like-minded developers to sell their programs at the time. It was also an opportunity to provide more customization possibilities to Shopify merchants. However, this decision was critical to Shopify's expansion, because it allowed them to expand at a time when other web businesses were contracting. Many modern digital businesses have struggled to make the shift from tool to platform as Shopify did. The wave of software tools that occurred between 2004 and 2008 made the web a friendlier place by providing simple solutions that accomplished one thing exceptionally well. These tools were initially useful because they were straightforward and easy to use. They replaced previous tools with bloated feature sets that featured difficult user interfaces. However, when the businesses couldn't grow beyond being simple, pleasant tools, they were bought out and absorbed into larger corporations. Many businesses failed to make the crucial shift from tool to the platform. YouTube is a prime example of this, having been bought by Google in 2006. Shopify, on the other hand, made the transition, and it all began with the launch of their API platform, which connected Shopify's program to other programs and applications on the internet. When Shopify launched POS in 2013, it gave merchants new tools for controlling sales and gave them another way to increase revenue on the platform. POS, on the other hand, wasn't just another useful function. It was a pivotal moment for Shopify, allowing them to broaden their reach once more. Instead of expanding on the internet, they intended to capture offline trade this time. This entailed shifting the focus of the company from product to mission. Shopify's vision was initially primarily product-focused. Their goal was to make it simple for anyone to develop a visually appealing and functional online store. These tools and platforms were well received by the early customers. But in order to keep growing, Shopify broadened its mission to include a larger audience. Rather than focusing solely on e-commerce software that benefited online retailers, they strove to improve commerce for all. This was true for everyone selling anything, any place, not just online business owners. By shifting from e-commerce tools to a broader aim of enabling everyone to sell on and offline, Shopify went from product first to movement next. They're now diversifying their distribution channels and casting a larger net. And the company is sure that making all types of commerce easy will continue to drive the company's growth as long as they get a cut of each transaction. By the way, if you're enjoying the content, please be sure to like and subscribe. I post videos every Wednesday. Now, as a reward for subscribing, here is a 5-second video of a cute puppy. E-commerce is becoming increasingly popular all over the world. Last year, digital sales accounted for approximately 18% of total retail sales, up from 14% in 2019. Shopify, which has grown to be a $185 billion company, has benefited from this trend. Despite this, the future of this Canadian technology company appears to be bright. After all, e-commerce is still relatively new, and Shopify is pursuing a robust expansion strategy. This is why, by 2030, this business might be worth $1 trillion. Shopify is a platform that democratizes commerce. Its software assists merchants in managing their operations across physical and digital locations, such as online marketplaces, social media platforms, and mobile storefronts. In addition, merchants have access to inventory tracking, analytics, and buyer retention capabilities, as well as a variety of third-party apps. Payment processing, cheap shipping, and financing are all available through Shopify. These services complement the company's subscription business, allowing it to provide a complete solution for small and medium-sized organizations. The company's total addressable market is now estimated to be $185 billion. That's about 50 times the $3.4 billion in sales made by Shopify in the previous year. To put it another way, this business is looking at a huge market opportunity that will only grow as e-commerce grows more popular. The 3 goals of Shopify's growth plan are to add value to sellers, improve the customer experience, and expand worldwide. The company has focused on creating its ecosystem of services to achieve the first 2 goals. Shopify, for example, introduced Shop Pay in 2017, an accelerated checkout option that has higher conversion rates than traditional checkouts. It's more convenient for buyers and more profitable for sellers. Since its launch, Shopify's payment processing capabilities have shown substantial uptake, with merchant usage increasing from 39% to 46%. And the future appears to be even more promising. Management made a game-changing statement in June 2021. Shop Pay would be migrating off-platform, even if they aren't Shopify merchants. Businesses on Facebook, Instagram, and Google will be able to use the service later this year. This is a fantastic move because it increases Shopify's capacity to profit from the vast digital payments market. As e-commerce has grown in popularity around the world, Shopify has profited from high demand. The company now serves 1.7 million merchants, up from more than double what it had at the end of 2018. Similarly, more services are being used by merchants. Shopify shipping was used by 52% of merchants in the United States and Canada in Q4 2020, up from 40% in Q4 2018. These growth factors have propelled the company's financial performance to new heights. Wall Street is expecting a lot from Shopify, and if the firm doesn't deliver, the stock would certainly tank. That said, Shopify has a lot going for it, including a large market opportunity, a growth plan, and a track record of strong financial results. And it has the potential to become a $1 trillion company by 2030.